So Europe is collapsing. I mean, the economy is cooked. And even Mario Draghi, the guy who literally saved the euro in 2012, is saying that it's all over. And I'm just talking about the economics. I won't even touch all the other issues, which are even worse. But let's not go there. Let's keep this about economics, because the economic situation in Europe is dire. And I'm getting my money out. And before you say doom and gloom, you're being alarmist, just stop. The proof is everywhere. BASF, the biggest chemical site on the planet, has been in Germany for over 150 years. They're now building their future over in China. They're moving operations over to China. Volkswagen, which is basically German industry with a badge on it, is strongly considering closing its German factories for the first time ever. And that's not even, you know what? Let's do scary lights, because this situation is bad. I got another one for you. Look at this chart. In 2008, Europe and America were about the same size. If anything, Europe was a touch bigger back then. Guess where they're at today? America is about 40% bigger, and the gap gets wider every single year. Imagine you're in a race with someone and you're leading, but then you randomly decide to just like punch yourself in the balls and let the other guy take the lead. That's Europe. But see, this is just how history kind of works. A nation's collapse generally follows the same path. First, the engine of industry seizes up, then the debt starts adding up, then the smart people just leave because there's no opportunity anymore. And you, a citizen, me, a citizen, and an investor are sitting holding something that's quietly falling to bits. But unlike the standard path, which is a slow step-by-step process that unfolds over decades, Europe is just like speed running its collapse. They just woke up one morning and said, you know what, shit is really, really good in Europe. It's lovely. This is a great place to be. Let's just fuck it all up. I mean, what other explanation can you have other than that? And if you got pensions, a retirement plan, a bit of savings in any normal European fund, you're already in this trade. You just never really chose to be in it. So we need to talk about a potential way out, which we will. By the way, if you don't know me, my name's Nick. I've been a professional investor and unprofessional trader for 25 years. Quick bit before I start, I'm not a financial advisor. This is not an inducement to buy or sell any assets. And as always, do not take financial advice from some random dude on YouTube. Oh, by the way, I was born in Australia, but my family's Italian. I speak Italian fluently. I nostri politici in Europa sono proprio stronzi. Allegedly. Anyway, my point with that is I have a whole lot of family in Italy. I live in Europe, so I'm well acquainted with its decline. Anyway, let's talk about the economic engine seizing up. For decades, the thing quietly powering European industry was cheap Russian gas. The German factories, they ran on it. But the tap got shut off by Russia and it's not getting turned back on. European industry pays roughly double what the Americans pay for power and 3 times for gas. 3 times. And think about this in your own situation. If your rent suddenly tripled overnight and you have the ability to just move somewhere else where your power is way, way cheaper, what would you do? You would move, obviously. So that's exactly what these factories are doing. Germany, the so-called powerhouse of Europe, grew by 0.2% in the whole of 2025, and that's after a 2-year recession. That's nothing, by the way. If this 0.2% is nothing. Unemployment has been grinding up to about 6.4%, the highest in nearly 6 years. And the car industry, we need to talk about the car industry. That's the actual pride of Germany. It's lost around 51,000 jobs in a single year, the worst hit corner of the entire economy. Porsche. Profit in Porsche is down more than 90% for the year. They took nearly a €4 billion hit unwinding the electric car plans that they got pushed into doing by the Commission. The European, we'll talk about the Commission in a bit because they... Anyway, the Commission is a merry band of half-wits that run Europe. And by run, I mean they repeatedly run their head into a wall and all the other guys, they cheer each other on. Anyway, Mercedes profit basically halved down 49%, right? And these aren't crappy little car companies. I mean, it's Mercedes, it's Porsche, it's Volkswagen. Heavy hitters have become heavy shitters. I shouldn't have said that. Sorry. It's never just the same big names anyway. Every one of these factories has hundreds of smaller suppliers feeding it. Tool shops, part makers, little family firms in the towns that you've never heard of that are all part of the big machine that is Volkswagen or Mercedes or Porsche. When the factory goes down, the town goes to crap with it. I mean, look at Detroit in America. That's a perfect example of what's happening in Europe right now. The apprenticeships dry ups, the high streets, they board up, and the clever local kids to had a job and a future in that factory, as an engineer, for example, they're now looking for a flight out. That's what 51,000 lost jobs actually looks like on the ground. A town just going dark, right? And then there's the dumbest part of all. So the commission told car makers, get your average carbon emissions down by 2025, or you need to pay some fines. But most haven't been able to do it. And instead of paying the fines to the European people to improve infrastructure, fix some of the many, many problems in the EU, where does that money go? Where do the fines go that European automakers have to pay because they haven't made enough electric vehicles? And they haven't made enough electric vehicles because people just don't want to buy electric vehicles. Anyway, whatever. They have to buy carbon credits off of Tesla. Basically, they're renting Tesla's clean numbers to dodge fines in Europe. European car makers are handing cash straight to an American company that's crushing them just for permission to keep selling cars in their own market. It's like being mugged and then having to tip the mugger, shake his hand and say, good job, mate. Thanks for mugging me. That's a fine job you did there. And then we wonder why the European auto industry is dying. That's the commission for you. And I know people might say, it's not the EU's fault. It's Russia for cutting off the gas supply, which caused this whole problem. Well, I kind of half agree with that. It is Russia's fault, but that's also like saying it's not your fault for getting beat up when you walk up to Mike Tyson and you slap him. Europe put itself in this situation. Right, I need to calm down a bit. I'm getting, this stuff just really annoys me because, I love Europe and I just think it's sad. So let's scale it back. Let's talk about some maths. France's government, debt is around 116% of GDP and it's still climbing. That's a lot, in case you don't know. It gets downgraded over and over again. Their borrowing costs are creeping up towards Italy and Greece, which is just not good. Italy's debt is around 137% of GDP, propped up by the European Central Bank. Wouldn't it be a cool idea if money the commission forces automakers to pay to an American competitor like Tesla went towards paying off debt within the EU? Crazy, crazy idea. We shouldn't do that. We should just send it to a competitor in the US. They're fucking clowns, I swear. Anyway, I said I wouldn't get angry. I'm sorry. Underneath this debt problem is the same rot. Everyone's getting older. The workforce is shrinking. So you got fewer people working and paying in, and more people drawing a pension every year. You can see where this ends up if you look at just the trajectory. More promises to pay, fewer people to pay them, and no growth to cover the difference. There's basically no lever left to pull because you can't just keep taxing your way out of this problem if you're the government. People are already broke. You can't keep taxing people who are at the end of their rope already. And you can't grow your way out of it because there's no growth in the EU. So that just leaves the printer. They have to keep printing money. Same ending as everywhere else, really. America's doing the same thing. And when they print, here's what actually happens to you. The number in your account, your euros, they stay the same, but it just quietly buys less and less every year. It's a mass devaluation of fiat currencies, and that's the problem. And this is happening in the UK, it's happening in Europe, it's happening in the US, and there's no where it's really safe because America, like I said, is doing the same thing. Canada is doing the same thing. Australia is, well, to an extent, doing the same thing. Everyone has to print. So we need to ask ourselves, how do we protect against inflation, against devaluation of currency, debasement of currency? Against printing? Well, the answer is, we'll talk about the answer in a bit. I just want to bitch about the EU a little bit more first. Because I started talking about this tax thing, and tax is a big problem in the EU. There's more of it every single year. Higher income tax, higher VAT, little stealth taxes that you don't even really notice until they all add up. So you pay more, and the roads still have potholes, the hospitals still have massive queues that just keep getting longer, the trains don't show up, you pay more, you get less. And honestly, everyone's familiar with this issue. That's in America too. Now, could they fix any of this? In theory, yeah, sure. Draghi, the guy I mentioned earlier who saved the euro in 2012, he literally wrote the how-to, hundreds of pages of it. I think it was actually 200 pages. But fixing it means getting 27 countries in the EU to agree on something hard and painful. Europe can't even agree on what time it is between them. It's certainly not going to agree to this, which is quite sad. And that brings me to the part that's the most grim. Europe regulated itself out of its future. While America was actually building the big AI companies, what was Europe doing? It was writing rules about AI, holding meetings, setting up committees to keep an eye on other committees. The one piece of tech that Europe has shipped to the whole world this decade is the cookie consent pop-up, the big export. That's what they've brought to the world. America shipped ChatGPT, Claude, Gemini, and even the ugly cousin of those three, Grok. The EU couldn't even put out a Grok. Instead, Europe's big move was to write the world's first giant law to police it, the AI Act, hundreds of pages telling everyone how to build something that Europe isn't actually building. No one really cares about what they're saying. But there's no European tech company that actually matters in the world. And that's not just bad luck. They taxed it, they fined it, and they buried it in paperwork until everyone left. They're just not bothering to build in Europe anymore. They ordered everyone into electric cars that nobody wants to buy. They fined their own car makers for not selling enough of those things that nobody wanted. You can't even make this shit up. They had every chance to pick growth, and every time they went, nah, let's just control it a bit more, let's regulate it a bit more. But all of this comes down to the biggest and scariest issue any nation faces. Young people are leaving. Young, talented minds, the future, just saying, we can't live like this anymore. We can't live here anymore. This place is falling apart. And that's the signal that I think everyone misses, but it's one that's always spelled doom for nations. Think about what a country's future actually is. It's the young, clever, ambitious people. That's the whole thing. And Europe trains some of the best engineers and AI researchers on the planet. I don't really like AI, but it just does. It's a fact. It trains some of the best on the planet. Then it waves them off as they buy a one-way ticket to California. Europe is basically training talent for America for free, hand-delivered, and the ones with the really big ideas, the founders, the serious researchers, the really ambitious kids, they take one look at what it costs to raise money in the EU and to move fast in the EU, and they book a flight to America. The AI labs, the ones you've actually heard of, they're nearly all American, but many of the key figures working in those labs are Europeans. And once they've gone, they don't come back to the EU. They build their companies over in America, they raise their families over there, and that's just where the jobs and the money end up. 7 American companies, the Mag 7, Apple, Microsoft, Nvidia, and you know the rest of them, those 7 are worth just under $23 trillion between them. That is more than every single public company in Europe put together. That is obscene. 7 US companies are worth more than the entire European stock market. Nvidia, one company is worth about as much as the entire German economy. So when your pension provider tells you, don't worry, we're keeping you nice and safe in European stocks, you need to understand what that actually means. That's your retirement money sat on the wrong side of the biggest gap in modern finance. And by the way, I'm not saying to go buy US stocks or buy the Mag 7. That's not my point. Anyway, you're on the losing side of that trade is my point. The big money has already figured this out. They left. The only real question is whether you're going to figure out. And when I say you, I just mean the people. I mean us, the citizens of the EU. And the money pulling out of Europe, it just has to go somewhere. Right now, it's gone straight to those American giants. Also, much of it has gone to Poland, which is actually one of the few countries in Europe who has its shit together. Poland's really interesting because for a long time, a lot of Polish people were leaving Poland and moving to the UK for a better future. And now they're leaving the UK and moving back to Poland for a better future. So props to Poland for getting it all together. But you know why? That's mostly because they don't listen to the Commission. And look, I'm so happy I bought into their stock market, by the way. I bought the WIG. I made a video on this a little while ago. It's up 15% this year. I'm not going to say I told you so, but I told you so. It's up more than SPX this year, which is just priceless because people laughed at me when I said I'm selling SPX and investing in Poland. They said, it's never going to keep going up. It's gone up too much, but I'm cashing in. Now, you're probably thinking, yeah, this is a slow motion thing. I've got loads of time, but that's the trap. Remember, there's a massive, massive gap between the EU and the US. It was basically 0 in 2008, now it's 40%, and it gets worse every year. And instead of looking at the US and saying, wow, they're getting ahead, maybe we should do something, the EU forces one of its biggest industries, the auto industry, to pay a tax to American companies. They train world-class engineers and then they ship them off to America. It's self-sabotage on a massive scale. That's what the EU is. And there's also a clock on it that most people don't know about. Since COVID, the whole European bloc has been propped up by an 800 billion euro pot of money, recovery money. Those payments stop at the end of 2026. So the crutch that the EU is propped up on right now is getting kicked away, which honestly, I might be selling my Polish positions around the end of the year, because I'm not sure how well Poland's going to do when all that money goes. But anyway, what do you actually do about it? Now, that's the big question. I think holding fiat for the long term is probably one of the biggest mistakes that people can make right now. But before I say a single word, I should say I'm not a financial advisor. Go talk to a real financial advisor, not some random dude on YouTube. That's not my point. I'm just telling you what I'm doing with my own money. You should talk to a professional about this. So if holding fiat long term is a mistake, in my opinion, what alternatives are there? And before everyone says, well, what about the dollar? We could trade our euros for the dollar. The euro is in trouble, but just flipping all your euros into dollars, it might actually be a bigger trap. I think America is going to have to print just as hard. If anything, I think the US dollar is probably going to get devalued faster than the euro. What I'm mostly interested in is stuff that can't be printed, real physical things like gold and silver. And full disclosure, I hold frankly unhealthy amounts of this stuff. So keep that in mind. I am biased when it comes to metals. My metal exposure is now around about 40% of my portfolio. I did sell some gold and silver when it was really, really expensive, and I diversified my metal exposure a little bit into miners and adjacent producers. Also, I'm buying up copper and uranium, not physical uranium though. Don't raid me, please. I'm not buying physical uranium, And here's the case for metals. Go back to 1971 when the dollar got cut loose from gold, when Nixon ended the gold standard. Back then, $1 US dollar bought about 35th of an ounce of gold. Today, it buys around 4,000th of an ounce. So that's the strongest currency on the planet, losing basically all of its value to a lump of metal over 50 years. Gold's done about 10% a year since 1971, while cash just sits there rotting away. I say this all the time in my videos, but since 2008, the dollar has lost about a quarter of its buying power, but that's the official government numbers. We all know that it's more like 50% of its buying power, because we could feel it all over the world. I mean, we're all in the same place as America. Whether you're in the EU, the UK, Australia, Canada, we all feel our loss of purchasing power with our fiat currency. In the same stretch, gold is up over 530%. Silver is more volatile, but this year alone, or last year alone, it was up 130%. Uranium is becoming a critical resource, If we have any hope of powering the future, we need to build more nuclear power plants. That's just becoming the reality of the situation. And look, I'm not telling you to remortgage your house and go buy a truck full of silver or uranium. I'm telling you that these metals, they hold their value while every other paper currency in the world slowly bleeds its value. If you want a bit more risk though, there's always the miners, the gold and silver mining companies. But again, talk to your financial advisor, because the thing with miners is when the metal moves up, the miners, they pump harder. But when the metal moves down, the miners, they dump harder and a lot harder. So it's not for the faint-hearted. You need to talk to a professional about that. And if you still want to own shares, the thing is, a lot of people don't understand that there's ETFs out there that give you kind of varied exposure to the world. Let's say there's one called World X US. And this is a way for people to invest in the entire world, excluding the US. Now, why would you exclude the US? Because the US is propped up by all these major AI companies. So that is a massive concentration risk in the AI sector. So World X US gives you exposure to other economies which are growing fast, like, Brazil, etc. And one last thing, this one's really important. Do not leverage trade. Do not trade or invest with borrowed money. That's when things get really bad. That can turn a bad year where you lose 10% into you're literally bankrupt. The whole game is to still be standing when the dust settles, not getting margin called at the bottom while all the big boys buy all your stocks for pennies. So don't leverage trade. Look into metals, look into uranium, look into copper. Talk to your financial advisor about it. Look into diversifying outside of the US, but getting more global diversification. So you can still stay slightly invested in the EU, but then you've got World X US, which gives you exposure to a bunch of other countries, strong growing economies. Anyway, that's it from me. I'll see you in the next one.